Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow up 186. Nasdaq's up 2. S&Ps are up 11.5. Gold contract down $25.50, traded at $1,199 an ounce. Silver down 85 cents at $16.41 an ounce. Both of them are getting whacked hard. Platinum down $16 at $1,244 an ounce. Copper off 4 pennies at $3.06 a pound. Light sweet crude down $1.34, trading out at $80.84 a barrel. Bonds, we have the 10-year up 3 ticks, 126.18. 30-year up 4 ticks at 141.16. King dollar up 189 ticks at 86.22. The euro's down 19, trading out at 126, and the yen is up 42, trading out at 109.32. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&P, let's take a look at them. This is going to be just amazing, folks. This just may go down as one of the ultimate in technical analysis. We'll see how this whole thing shakes out. But this is what we have. Cash S&P. We get to 1999.40. Okay, we're at 1990 right now. You take a look at this, and we put this on a 3-year weekly. And what you're going to see is that you're going to see that first week of October, we had the break with vicious volume on the way down. You broke a channel line, and you broke it with conviction. Conviction specifically means wide price spread, accelerated volume. Take it apart. We've come right back up to the other side of the line, and we've done that on dramatically lighter volume. It tagged this line this morning, and what happens, folks, with the trend lines in general, okay, well, technical analysis in general, okay, it's an art, not a science. That's the reality. Fibonacci, number-wise, yes, that would be a science. It's mathematical. Trend line basis, when you're putting them together, it's like, okay, bottom line, the trend line is set up from, let's say, 1992 to about 1995, 1996. Bottom line, we get up to 1999. We're at 1990 right now. Dramatically lighter volume. Now, not just on the trend line break, but also on what we're going into. Now, what does that mean in the context of where we are right now, what's going to happen the next few days? Well, my take is that we backed off. I'll do the SPY so you can see what we've done intraday thus far, because this is a day trading paradise, folks, okay? And what it is this. You came up to the line. You busted over it. You had, the last time we had any volume, by the way, just on even an intraday basis, was yesterday, and that was on the way down from 197.99 to 197.13. Then we get down to 196.80. That's on the SPY. We go topside again. You get over the highs of yesterday on a 10-minute basis. It just died in the vine. I mean, good time too. The first break topside at 2.3 million. The 2.3 million was going over 13 million. The next bar had 2.3 million, and the next bar had 880,000. It took 30 more minutes to come downtown. So you come down, first leg down, you did 2.8 million. 10 minutes before I get in, we just did 4 million. Okay. Now, that being said and done, you pull back down. If we take the same SPY and we put that up into a 3-year basis, what you're going to see is the same type of setup. Now, this setup here, the difference being is that depending what quotes you have up, okay, you're going to be able to have the volume right next to it at the same time. So the volume characteristic right now, we're at Thursday. We have one more day of trading. On a weekly basis, we have 436 million shares. Well, the 436, folks, is going into 653. The daily basis is not even close. I'll do the daily basis for a second for you. So the break of this line, we got to 199.95. Right now, you're at 199.07. The line is basically set up somewhere around 199.12 to 199, let's say 0.40. You're up there, you're failing it, you're pulling back. Okay. So now that being said and done, we know that, okay, we're on, it's the end of the month. It's window dressing. It's election cycle on Tuesday. With that type of setup, this is going to drive everyone right up a wall. And what I expect you're going to see is that you'll see this get tested and tested and tested over and over next 2 or 3 days. Bottom line, we're going south. You take a look at the SPY, this is what you have. And this is the most deviant. It's so cool. So the SPY, thus far, we've done 88 million shares. The 88 million shares is going into 150 million shares. That's on the daily, okay? We put this on a weekly basis, and what you're going to see, it's about as clean as you can get. Weekly basis, first high we made up there had 561 million shares. You come off that high with 595, 683, 857. Guess what? Last week, huge week, you did 700. This week, you get 424. The 424 is going into 600. It's not going to make it. I do expect what you're going to see, though, is that the test will get done. And if this wasn't the window dressing and election cycle, this would be the sell right here. I don't plan on selling until this gets tested a few more times. And it's going to be wild watching how that it actually can get tested and get tested on dramatically lighter volume again. That's what we've done thus far today, folks, okay? Thus far today in NYSE, we're going to be lucky to do 650 million. Yesterday we did 822. We go and take a look at the Dow Industrials. Inside the Dow Industrials, what do we have? Dow Industrials up 200 bucks. Great leading story, right? No doubt about that. Dow Industrials hit a price point up here, 17,223. The high on the Dow Industrials is 17,350. The low of that high is 257. We hit 223 today. 257 can get hit in a heartbeat. NASDAQ Composite. Now, the Composite's a different animal. Composite, talk about basically turning pretty quick today. The Composite, we hit 4575. Right now, you're at 4554. Volume on the Composite also is going to shrink dramatically within... Well, it has shrank dramatically, but I expect you're going to see it shrink today. Today, we're going to do 1.8 billion versus 2.1. We go over to the 3Qs, the NDX 100, and what you're going to see in the NDX 100 is that we've done 28 million shares. We've hit a price point of 100.26. The high out there is 100.56. That high had 46 million. That's on your daily. We set up the weekly. We do the weekly, and what we have on the weekly is this. Weekly basis, 185 is the high, and thus far we've done 132. Add another 30 in there, we're going to be about 165 to 185. It's quite a market. That's the bottom line. Gold contract. We go over to gold. Hammered gold out here today without the dollar actually going to the moon. Gold contract comes down 4,000 contracts. That is going into, I believe we got... You're going into 148,000 contracts and 186,000 contracts. We got to 1195. The swing low out here is 1183, and that's game to get tested. We'll see whether the volume contracts as it gets down into that level. I expect it's going to. Why? Because if we do go over to the GLD, what you have with the GLD, we're coming down with 6.4 million versus 11.3. And in that context... When we go over to the dollar index, okay, what you have is this, DXZ4. The dollar index, folks, basically got to a price point out here today of 86.58. You're at 86.21 right now. You've done 34,000 contracts. The dollar got up and over the October 15th level, and that's the one I wanted to test, which is the 86.13. Right now, we're at 86.21. You get back under 86.13, what I expect it will ASAP. Dollar is still number one. Longer term, yeah, dollar wants higher highs. Shorter term, and when I'm talking shorter term, 2 or 3 months, dollar wants to trade down into this 83.99 to 82.97. Now, and here's the kicker. When we come back, we're going to go over bonds, because bonds are still the screamer out there that this market's going lower. And it's just consistent over and over and over again. This is Tom O'Brien. This is TFNN. Dow Industrials are up 185. NASDAQ's up 2.5. S&Ps are up 11. You stay right there, folks. We're coming right back.